Welcome to the 928 Update with your hometown agent, Sarah Allen. Today we're speaking with Greg Reardon with New American Funding. So Greg, question on everyone's mind. How tall are you?
6'5", 6'6".
Okay.
Yeah, depends on the boots.
Right, I wore heels today just to be, self-confident enough to stand next to you. I also wanted to go over a conversation we had a couple of days ago about kind of the lending side of things of real estate and what's being affected and what's going on. So please touch base on that.
Sure. A lot of people, as you know, are being laid off, and that's creating waves in lending for a variety of reasons. People are now going to struggle to pay their mortgage over the next 30 to 60 days if they haven't saved. Mm-hmm. So there'll be some options, but I would suggest that these folks call their lender that they're working with, call the customer care or customer service line, mm-hmm. and see what their options are. Read the fine print.
Right, and I hear the word forbearance kind of thrown around a lot, mm-hmm. and I was wondering if you could kind of explain what that is for someone who doesn't know what that means.
Sure, forbearance is pushing your payment off for a determined period of months. So it may be 2, it may be 3, it may be 4 months. Okay. But then it's going to come due on that month that you reinstate your payment, mm-hmm. all of the back payments.
Okay.
There are other options where they could push it out over 6 months and pay that back over 6 months, okay. in addition to their regular payment. They could tack it on the back end of the loan. So if it's a 27-year loan, it will extend it 27 plus how many months they've.
Okay, and you're still paying interest on that extension.
You're still paying interest
on
that.
So it seems like the number will continue to increase quite a bit.
For sure,
yeah.
And it may affect your credit too. So there are options that won't affect your credit, but if you go to the point where the lender has to modify the loan, that may affect credit. So always read the fine print and right. talk with even call your mortgage guy or gal too and say, hey, here, I got this paperwork. Can you walk me through it? I don't understand.
Right, and you talk about credit scores, and I was watching your video this morning about credit scores sure. and FHA loans. So what were you talking about there? Sure.
I don't know if it's good for me to name the lenders that are doing this, mm-hmm. so I'll just kind of go in a general source. There is a big bank that raised credit scores to 680 on FHA. Okay. There are other lenders out there that are raising credit scores and lowering debt-to-income ratios. Why are they doing this? Well, because the economy is, obviously we're going towards a recession, so the analysts are saying. With these types of loans, no down, low down, lower credit, FHA and VA typically have those dynamics. With that, there's also a higher level of risk because there are things that are more allowed or lenient in the credit world in an FHA loan or a VA loan that there aren't in a conventional loan. Okay. So that means there's more risk to those right. types of loan programs, and subsequently a higher default rate right. or forbearance rate. Okay. When that happens, the lender is held with that bag and has to make those payments until they ultimately default and claim the insurance on that loan.
So it's a little bit harder for FHA, kind of first-time home buyers, if you will, that are in that program right. to buy at this time. I had another question about 1099 employees and how it does take a long time for them to be able to qualify for a loan.
Sure.
I think it's 2 years is typically the length of time. Mm-hmm. So at a time like this where, maybe it's someone who's been working for 22 months and they've got 2 months left before they can qualify for a loan, but now they're in a position where they have to stop making income until everything reopens.
Sure.
Do they have to continue waiting and waiting and waiting until does that time clock almost restart because they have 2 months of no income until they go back to their job?
No, we would average their income over 24 months.
Okay.
So there may be a down cycle for 2 months, which will be explainable, but we'll look at the whole picture. And we'll explain that, and I'm sure the C-19 pandemic will be very explainable in lending.
So I also want to touch base on appraisals because I have been hearing some appraisals coming back a little bit lower, mm-hmm. and these are homes that have multiple offers on them, and the listing agent and the buyer's agent are going, what's happening? Why are they coming back so low? I was wondering if you had any experience with that.
I haven't seen them come in low yet, but I can only imagine it may be due to the economy and the downturn in the economy. And kind of the market correcting itself. But what we're seeing an increase in appraisals is property inspection waivers, where we don't need an appraisal because Fannie and Freddie Mac, they have enough data in that neighborhood to say, yes, that's priced right.
Okay.
They're also allowing drive-bys to avoid any more pandemic or contagious interaction.
Okay.
Now, I can only speculate, but if the home has really a beautiful interior, it may be missing out because it's a drive-by.
Right.
So,
Thank you so much for speaking with me today. So what's the best way for someone to contact you?
sure, thanks for having me. And the best way to reach me is 928-201-1151. And you can also go to my website, www.nafhomes.com/Greg Reardon.
So if you have any questions that's real estate related or you want to know about the real estate market, feel free to give me a call at 928-925-4072. You can actually call or text that number. Also, if you're interested in the home that you see, please text me. I would be more than happy to do a virtual walkthrough with you. Safety first. I will make sure I sanitize. I'll make sure I wear gloves. It's very important that I do that as an essential business employee, and I'll make sure that I get it to you in a timely manner. Thank you so much.